Well, to the rest of what's been happening on the local market now, and earlier I spoke to Martin Lakos from Macquarie Private Wealth. Martin Lakos, yet another day of a modest movement. Should we be thankful for that?
Well, we started out pretty well, Tiki. The market was up about 22 points on the back of what the US had done, which had rallied from being down, and was largely driven by better US or more upbeat US statistics. This time round, we've seen better than expected retail sales, up about 0.5%, and the Empire Manufacturing Index, again showing manufacturing in the New York area, continues to improve. Now, we've seen in the last 3 or 4 months quite solid improvements in economic data out of the US, and yet markets obviously continue to be fixated on the Eurozone issue. And unfortunately, that was the case today as well, with our market closing down 38, really on concerns of the euro falling away and the yields on sovereign debt starting to rise overnight. So once again, it's very much on that roundabout of the Eurozone issues.
And the central bank's still doing not very much.
Indeed.
I see Rio Tinto has been talking to analysts. What do we know?
Yeah, look, in London, Doug Ritchie, the head of the energy group for Rio, gave a briefing to analysts, and largely covering as many topics as he possibly could. Quite interesting. They still remain quite upbeat in regards to the outlook, but in particular for thermal coal. They're saying they can shipping and selling every tonne they can produce. They continue to expand production. Good example is their new mines opening later this year in Mozambique and looking to ramp that up further. They're certainly a little bit wary of a wetter season here in Australia going to next year and making preparations for that. But they are certainly seeing good demand going through. They continue to be very committed to uranium going forward, and they did comment that it's still seeing fairly tough labour costs impinging on profits for them. But I think it's really quite interesting. Also, he made some comment, although Rio is not a big producer of coking coal, they're certainly saying that market seems to be improving as well.
OK, from coal to iron ore, and I gather the Chinese steel mills are said to be restocking iron ore. How have the other iron ore and steel stocks fared here as a result? Well,
what we're seeing, Tiki, is that we did see quite a large dip in the iron ore price, if you remember, over the last 3 or 4 months, as we saw some tightening by the Chinese authorities, and steel mills started to really reduce inventories. Well, that's starting to get reversed. In fact, the iron ore price has now rallied about $20 a tonne over the last 10 days or so, largely on this buying. And it does appear that steel mills are restocking at this point in time. What we do need to see is further demand coming out of those steel mills. In other words, a pickup in production to see that continue. But it does look like it's the case, and it may well be a precursor to seeing softer monetary policy out of the Chinese authorities now that inflation data seems to be holding up. Certainly the steel stocks continue to be a bit volatile and weak. You know, stocks like Atlas Iron have come off this week alone, but we certainly think there's good value there, certainly from a cash flow perspective, in stocks like Atlas Iron.
And iiNet has gone into a trading halt. Bit of chatter about a possible acquisition?
Yes, look, one of the print media groups had in the paper today speculation that they were about to make a bid for Transact, a regional telco provider, largely to government. Again, I have to emphasise that speculation. They put out a notice about 11 o'clock, so after an hour's trading or so, asking for a halt with the stock exchange. That'll reopen on Friday, and we'll get more news out of iiNet on what's actually going on that Friday notice.
Martin Lakos, very good to talk to you again.
Thanks, Tiki. Always a pleasure.
To the other major movers on the local share market now, it was after hours when Pacific Equity Partners' long-awaited bid for the Spotless Group finally arrived. The $700 million takeover proposal is a $2.63 a share, well above the trading price. Cabcharge Australia inched higher despite results for the first quarter it described as beyond expectations. QR National fell. The company's finalised a $900 million rail haulage agreement with Jindalby Metals. And Iluka Resources lost more than 3% despite announcing an increase in ore reserves at 3 of its mines. Turning to currency markets, the dollar is down against all the major currencies and sitting at just above parity. It's down more than a cent against the yen. Onto the commodity markets now, and in New York, oil is again pushing $100 a barrel. Gold has slipped despite all the uncertainty.